Okay, good afternoon, everyone. This is Gary Humeski and Gary's Traders Group. It is Monday, September the 8th, 2014. I want to welcome everybody on board for our second session here of our inaugural session that we had last week. This is very informative. I talk about a lot of trades, look at the macro-micro picture, and we learn a lot from each other on this thing, and hopefully I share a lot of good information. All right, let's get through the disclaimer real quick. This webinar is for educational purposes only. I'm not a licensed security broker giving any kind of trading advice or security advice. We do use a lot of different tools on this. I'm not endorsing any of them other than perhaps Best Choice since I work for them. But trading does involve risk, folks, so do your own due diligence, and hopefully the information you glean from these will aid you in doing so. Okay, great. Got a lot of good stuff to talk about today. Let's take a look at the macro picture. Bring up Thinkorswim and bring up the three indices. Okay. If you have any questions, of course, about these charts, feel free to ask me, what's going on, and I'll be glad to share with you. Let's see, I need to open this up, and I need to detach this somehow. I thought I knew how to do this. Well, I'll keep this down here. There was a way to detach this box, this chat box, and that way I could see anybody when they typed in a message. Bear with me one second. Okay, well, anyways, we'll just go ahead and use what we can here. Everybody can see these charts then. I did Fibonacci retracements and extension on each one of the indexes, so you guys get a good pulse of where potentially the market could pull back to, as well as where it could extend to. Based on a 3-month time period. So as you can see, this indicator down on the bottom is like Bollinger Bands with this yellow line, which is a detrending price oscillator. It's a very good tool. It's a standalone tool in Thinkorswim, but this happens to be a licensed David Elliott, God rest his soul, indicator, and I found it to be quicker acting than the MACD. Normally I'd have a MACD, which is a lagging indicator, but it also gives you a pulse of overbought, oversold. This does the same type of job, except it reacts quicker. This green and red line, as you see on all three of the indices, is a Hull moving average, which is also available at Thinkorswim. This one's a little tweaked, reacts a little quicker, very, very accurate. You can see on the Dow, we seem to have plateaued here at about 17,160. It's hit it several times, 1, 2, 3, and we've got a turnover of a Hull, as well as on the SPX, the S&P 500, as well as the comp, which is the NASDAQ. So you see, and this is, kind of like getting set up for what normally happens in September. Normally, we see a downturn towards about the second week in September. If pretty much any list that you're going to run through Best Choice, and it populates your calendar and you look at September trades, you have bullish trades at the beginning of the month and you have bearish trades towards the end of the month. Also remember, folks, typically speaking and historically speaking, September is not that good of a month in the market. Things really start to accelerate, of course, in October, November, and in through December because of third quarter earnings, retail, and everything else. But got a lot of trades to go over today. This is the macro picture. Just be aware of the retracements where things could potentially go down to. These numbers here, jot them down, keep in your mind. And of course, these numbers here is where the market will continue to push up. And it's, again, this is seasonal, kind of up and down movement. I'm not bearish at all in my thinking here. I'm just saying this is a typical scenario. We've had a nice little bull run. It's kind of capped. We got a hull pulling over, so do expect a pullback here shortly. All right, let's look at economic news for this week of what we should look out for. There isn't a lot happening until Thursday. In the morning, the jobless claims come out, and Friday is retail sales and the consumer sentiment, which, believe it or not, people do react to it. It's not a vehement, hard reaction, but the market does react a little bit. So if you're in any kind of positions, looking to get in or out, the market will react to this. But you'll see it react in the futures. And if you guys don't do this, you should. You should, I don't know what charting systems you guys use. I think most everybody uses Thinkorswim. And it's very easy to find out what's happening pre-market. And you have, under the trade tab, you have active trader and futures trader. And it doesn't have to be there. It's just you can create another chart there that you can flip to. I mean, it could be on a regular chart, and you just pull up a regular chart. But type in the symbol. You see the symbol right here, ES or /ESU4. It's HMUZ. I've always remembered those four letters, HMUZ, standing for the different quarters. And when you do that, like if you type in /ESU4, it will pull up the S&P futures. But this is really not giving you any indication other than, wow, the market's flattened out and, blah, blah, blah. But you want to see pre-market, you go to Style, Settings, go to the Futures tab, and then make sure that this is highlighted or checked, Show Extended Hours Trading Sessions, and then check Highlight Extended Hours, and then click Apply. Now when you do that, it will not change a daily chart, so you have to go to a shorter time frame. Go back to Style. I typically will do intraday today, and I'll do a 5-minute chart. Now I see this is all pre-market in gray. If there was, and you can see right here with the time, so if I put my cursor where it says 8:30 right there, and there was the report that came out for jobless, I will know how the market reacted, and I'll know what to expect, and it may be pre-built in. So this is a nice technique to get an idea of, hey, if I'm looking to make a trade today, there's economic news coming out on the calendar, how is that going to affect my trade? Is it spiking up or spiking down? Now, one of the other techniques that I use, so you guys know some of the things that I do, let me change this back to a 3-month chart. When is a trade I'm going to talk about here in a little bit. There are two moving averages that I learned from a pretty successful trader out in Arizona, and he got it from Floor Traders. And there are two MAs, or moving averages. They're exponential moving averages. But boy, do they really, really work to give you a pulse of the direction of the market for the day. And that's a 49 EMA and an 89 EMA. You'll see an example of this here. I'll go to Active Trader. These two lines will tell me which way and direction the market is ultimately going to go. Now, this happens to be a 1-minute chart and a 5-minute chart. If I consolidate this a little bit. Now, today was an awful day in the market. Why? It's flatline, you see? Really didn't make up its mind until here where it tanked hard and then rebounded. So we're kind of in a fickle area. There's quite a bit of volatility, but these two normally pre-market will tell you the direction of the market. If the 49 is above the 89, then be bullish. If the 49, which is the cyan, is below, it's bearish. So just another little technique you can do for pre-market on the ESs to know the direction of the market for that day. Okay, a little side bit thing I wasn't even going to talk about, but I went ahead and brought it up. Okay. Any questions about macro or micro? We know what's coming up. Jobless claims, retail sales, consumer sentiment coming from University of Michigan. And we've seen the, one more chart I want you guys to perhaps look at. This is a very important comparison chart. It's the VIX versus the SPYs, because the VIX is predicated on the S&P 500. This is considered the fear index, and of course we know what the SPYs are. It's the spider on the S&P 500. Interesting correlation. When the VIX goes down, the S&P goes up. When the S&P goes down, the VIX goes up. And as you can see here, folks, we've got an overbought S&P right now with a breakdown, and we've got a VIX with the DPO, the price oscillator. This is telling you where price is going, is moving up. We have a doji today, but we also have a breakout. We've got already a hull that's changed way back here. See, this is an early predictive indicator. This reacts quicker than the MACD. This reacts when price busts through the Bollinger Bands. And this is Person's pivot study. When you have these two combined, usually the PPS predicates and is always before. If it's simultaneous, then generally it goes. Now, VIX is really not a good example to use this on. The S&P is better. You can see right here the Person's pivot study, literally 95% of the time, always triggers before price breaks the Bollinger Bands. But when you have these two in combination, quite rare that it does not, especially on a daily chart, that it's not going to move in that direction. We're real close now here to the S&P breaking the Bollinger Band and starting to pull down like the price oscillator already has. So again, there's some caution to be here. We're already at the 8th. You know, most of the bearish moves start historically around the 15th, 16th. Again, that's an average. It could be a little bit early, could be late, but that's what historically happens. Two good charts to be aware of, okay? All right. That said, I am going to move this over here. I didn't think about doing that. I have two screens, and I just moved the chat box to the other screen, so that's good. Bear with me one second. Okay. All right. Let's get to some trades. There are three trades I've already talked about last week. I'm just going to cursorily go over them this week, and these are three earnings trades that are coming up. The first is coming up this Wednesday, and that is the company Five. As you see, they're on a very bullish run. And we have earnings coming out on 9/10 after market, which is Wednesday after market. Looking up best choice, and look at what does 5 do historically. Also very important, you see how we busted above the 200 here? That's very significant. We have an 8 EMA, the red line, crossing a 20 SMA. The green is the 50. So both the 8 and the 20 have crossed the 50. Now we have an 8 crossing the 200, and we have price busted above the 200. These are all very bullish. And there's that alligator mouth. Oh, wow. Geez, oh, Pete's, what a huge, huge gap up. That's a very, very bullish sign. You know, and when you have this alligator mouth looking MACD like that, that's very, very strong. So that's what it looks like from a technical aspect. From a seasonal aspect, of course, this thing is a huge winner of 2 years out of 2 years. You go, well, Gary, you always taught me 2 years is not a repeating event. That's absolutely true. Jay had a question, what EMAs am I using? Are you talking about Thinkorswim or are you talking about Best Choice? I flip on Best Choice. I first started with the George Lee 10 EMA crossing the 20 SMA. So a 10 exponential moving average crossing a 20 single moving average. And then I used the typical 50 and 200 single moving averages. Those are very common. I just gave you, though, a trade secret of a 49 EMA and an 89 EMA. Those are two very closely followed moving averages to give a very quicker indication of market trend movement versus a 50 and 200. Okay, so he said Thinkorswim. These MAs right now, I think this one is a 1020. So this is my 1020 study. So this orange colored line is a 10. The cyan colored line is a 20. The 10 is exponential. The 20 is single. The green is just a simple 50 moving average, and the purple is a 200 moving average. So a very bullish move right here, obviously, that we see that's happened today. And this move here is, of course, very significant. They've got earnings coming out. This is a lot more of a fundamental trade. I'll be very candid with you. I mean, from a tactical aspect, yeah, it looks like it's very bullish here, but 2 years does not constitute a repeating move. You know, usually the minimum I do is 4. I did a bunch of reading on this company, and they are just exploding. So earnings should be good. Now, when I did all of this yesterday, please keep in mind when I talk about strike levels on a Monday after market, I do all my homework on a Sunday where I'm relaxed and I'm not stressed out during the course of the day because I trade during the day. And I don't want to be, you know, doing lots of research and trading because I can't multitask that good on trading, and I need to focus my attention on one thing. And I found myself over history that I do better when I put all of my attention towards one thing. And it's been proven statistically, even driving, specifically driving a car, you know, chatting, tweeting, or whatever they've equated it to being worse than being drunk. So these strike prices I choose are based on Friday's close. So adjust them accordingly, folks. You know, I do the heavy lifting and the research and find you these great trades. And, you know, I'm going to give suggestions of strike price and strategies. But remember, they're based on Friday's close. I do the homework on a Sunday, so adjust it accordingly. This is probably going to be a good example because of this big gap up. I chose the 40s. Okay, the September 40s. So let's take a look at what September 40s look like. Well, you know, they've popped up in price huge. $3.30. Whereas when I was looking at it, no, it wasn't that much difference. Again, I'm doing, at the money, folks, only because there's not enough history to give me the confidence to go out of the money. I mean, yeah, boy, this looks good. And boy, could I take 19.59% and add it to today's closing and say that's on average where it's going to go to? No, I'm not going to take that chance, not with 2 years repeating move. By the way, the other technique when you're looking at the seasonal chart is always go to tab 1, click on 2014, this current year. See where it's at on the scale from 0 to 100. Is it kind of following the composite yellow, whereas this thing is? So looks like it could pop up real good. So I'm sticking to my guns, and that's, of course, where all the open interest is. And you got a delta of 64, which means for every dollar movement, you're going to have a 64-cent move on the option. Now, always remember you have another factor to consider, and that's theta. That's time decay. When you're playing the spot month, we only got a week and a half left until expiration. That affects it. So this is 65. You have to subtract 9 cents from that. So that's really a 56-cent move net for every dollar movement on the stock. Now, I'm expecting a good pop, so I'm expecting a good return. Now, the other technique you can use is using best choice. There's 2 different settings. When you go to Program Settings, Security Options, you can set it at Thinkorswim if you have a TD Ameritrade account or Thinkorswim account, or you can set it at the original 20-minute delay, which has more rich features as far as analysis goes than the Thinkorswim. So when I click on the option chain, it'll now bring up an error. Let's try this again. Usually you have to type in a symbol for it to work properly, and this is not working properly. I hate when that happens. So we'll go back to the TD Ameritrade account. All right, this still has one of the features that's interesting to use. It's a little bit of a probability analysis, and that says, okay, what if I choose the 40 strike price, September expiration? The stock moves $5 based on all of these Greeks currently snapshot view. What is my potential profit? So you click the what if. And a $5 move would represent 97%. Okay, so just a nice technique there. Let me see if I close out of best choice and open it back up, if I can pull up, because I wanted to really talk about that. I had discussed this with Pete several times, and there we go. Okay, so not only do you have the what if, you also have the show targets and puts, which I'm not going to get into now, but if people are interested in looking at these other things, just email me and I'll do a 5-10 minute session how to use these things. This also shows the graph, which is good, and you do it by value. You can see where the volatility is. This is front month, and of course these are the different corresponding months, and then going into next year. Okay, that's 5. Next one is Thursday before market, and that's a big one. Of course, other people are expecting Kroger's and Campbell's, and that's what a lot of the market is looking at this week. Those are just not great seasonal trades or optional trades unless you're going in the money. It's not a real big hit. But Lululemon is. Now, Lulu over the last 2 years, just been hitting pretty hard. They expect good earnings. Seasonally, it's also a good play. But 7 out of 7 years, average move of 18.96%. When you click on what is it doing this year, it's way down at the bottom of the band. I'm not looking at this chat box. I'm sorry. I have to move my head. Oh, yeah, Jay brings up a very good point. And you're going to see almost every one of my options that I'm giving as potential suggestions are all not spot month, but a month out. Even with Lululemon, where is this here? I believe it's the 18th. Yeah. Lululemon, I chose the 42.5 Octobers. That's why I don't like this chain, and I like to go to Thinkorswim. Let's take a look at Octobers. Now that's interesting here too, Jay, and just like you say, these are anomalies that you want to look for. Whenever you look and open up a month and you suddenly see volume that's literally 100, almost 100 times, or what is that, 30 times what open interest is, it means there's a lot of excitement. And of course, you see people loading up here at the spot month. And you know what? It's not that much difference in premium. But look at the difference in IV. 73 versus 48, right? I mean, wow. So October really, it buys you time for everything, and you won't get hurt as bad if there's a miss on earnings. Now, will you necessarily get a pop like you would, trading Apple on a weekly on April 23rd earnings? Maybe not. You're not going to get 10, 20 times your money, but you're not going to get hurt as bad. So remember, there's 2 games that we can play in trading options. There's really only 2. There's lots of strategies to play on the 2, but there's only 2. And that's the intrinsic game or the time value game. Time value game, folks, is a lot less stressful. It's doing calendar spreads. It's going and buying more time, And if it's a good company with good earnings, it will continue to grow. It's simple as that. So, yeah, that's absolutely right. One of the members pointed out, this volatility here is going to get, and you can easily see it, it's going to get sucked out right after earnings. This is the market makers driving up the price based on an unknown event that's going to be taking place. And the closer you get to the event, the higher that IV goes. And so you look at 73 versus 48, this is probably more true to the actual IV. We could look at November, and look at November. So you got 13,008 at the money. I'm looking at October 70s, or October 40s, excuse me, for 340, 370. Again, this is kind of pricey, folks. I still like to buy cheap options, and I always will. But let's just say you get this for 370, and you divide it into the stock price of 41.68, you're paying a premium of 8.8%. That's a little rich. That's a little rich. Also, from a cash standpoint, 3 options, you're over $1,000. I think most of us play with $1,000 or $2,000 or $500 in that neighborhood, per trade. So keep that in mind. It's a good point you bring out, Jay. Thank you. All right, that's 5. Lululemon. Lots of volatility in September. October, 42.5 is what I chose. It's got a 30 delta. It's actually 28 cents per dollar move. And, you know, if you take 18%, $39.07 is the stock price right now. 39.07 times 1 point, I'm just going to do 18%. Gives me a target of $46. So that's way within 42. So if you look at a chart of Lulu, I evidently have, this is from way back. Well, this is an ugly looking chart, to be honest. It's really been range bound. Look at that. You know, and it never filled the gap right here. You know, when a stock crashes like that and it's a good company, it will eventually meander and fill that gap between what it closed at prior to the bad announcement and then what it opened at. It tried right here. It reached a high of $43.71, but this closed at $44.08, so it was just shy of filling that gap. So once again, buy some time. I did the October 42.5s, and it's not that expensive, you know, for a $39 stock, and you've got low IV, and it's over 20 delta. Okay, that's Thursday before market. Last earnings to talk about is Ulta Salons. As we know, I talked about it yesterday. It's Thursday after market, so you got Lulu before and Ulta after. Come on. Okay, there we go. Again, 6 out of 6 years. And you see there's no blue lines down here. That's one thing that I learned from Pete and how to look at the software and try to maximize the benefit out of it. There's no blue lines down here. We used to do this with Google back in October because it really just shot up so hard. It was like a big blank spot. This year right here, I don't know if that is 08. Yeah, see, that's 08. You see, so that's really kind of an anomaly. If I removed that year, which is not atypical, no stock reacted the way it normally, seasonally, and historically would during that period of time of September to December in 08. If I removed that particular year, then you know what? There would be no blue dot. There would be no blue lines here. It just all pops up. So you got a pretty good probability with 6 years, an average of 20.93% move. I chose the October 105s, which would bring it right back up to its last high right in this area here. It had good earnings here and it popped real strong. Another chart I like to look at is this one here, folks. I think I've shown you this one before because it's clean. It's a very clean chart. It's a 1-year weekly, 6-month daily, 20-day every 4 hour. And I look for that alligator mouth on the MAC. I look for a positive swing up for these, what's called the squeeze. And everything kind of lines up like that. Then I like this. This happens to be Tesla. Macro picture looks real strong on a weekly. Again, these MAs for your edification are 821 EMAs. 821. You can see how price is just It's never piercing it. Strong going up. Little curl over concern, a little bit downdraft here. 20-day does not look strong. It looks like it did a nice pullback. And I also have a person's pivot study right here. That is an early trigger. But again, this is a shorter time frame. You know, I like to look at the macro picture. So if you look at the strike prices and volume and so forth, you can see at 105, there's not a lot of options available or open interest. It's 260 by 290, which isn't that expensive, about a 2.2% premium. You look at spot month, there's a lot of people loading up at the 110s today, over 1,064 contracts. The majority of open interest is at the 105s. I'm going to reiterate this same statement that I did last Monday, though. One of my concerns is this large short volume for spot month. So make your decision on that, whether you're going to take a piece of Ulta or not. All right, those are the 3 earnings trades. I did a lot of digging to look at other trades. Now, everybody knows what's the big talk of the day besides Alibaba, which is going to raise $24 billion flipping dollars on their IPO, is what they've been told. And from everything I heard about Alibaba, it is going to set the precedent, and there's going to be a lot of other companies that's going to follow behind them and do well. And this is not a fad. This is a momentum type of stock that would continue to grow. So once it comes out and it settles, we can start looking at Alibaba and other companies like that start going in that direction. One of the other companies, though, that's very heavy in the media, can somebody type in and tell me which one it is that is all over the media today specifically? Anybody know? Uh-oh. I put everybody to sleep. Come on, Henry, Leon, Bob, somebody. Michael, Tom. Type in what stock. Anybody know? All right. Apple. It's coming out with its iPhone 6 tomorrow. A lot of speculation about that. Well, Apple historically has a 90% probability of going up with pretty doggone good consistency. So that's a trade from a seasonal perspective, let alone the news tomorrow. I'll preface this, and that is, obviously wait for the announcement, see how the market reacts. If it decides to crap on Apple, which, the market tends to like to do, driving the price from 725 all the way down to 385 last year, and then it finally worked its way back up into the 500s before it did its 7-to-1 split. So, there's a lot of Apple haters, as I call them. So see how the market reacts. It's got stiff competition from Samsung that cut a deal with Facebook, to compete with their tablet-like system. So, and other companies that are really coming on in technology. However, seasonally, 3.88 move. Look at the volume. Obviously, there's huge, huge volume. I'm not looking at September on anything, but you can see the volume in September. Always looking at October's. And in October, when I did my research, it went down 61 cents, so this will still be accurate. The 102.14s right here is the one I picked. This one here, $1.99. For a $98 stock, that's less than, that's about 2%. And it's very simple. Again, how did I figure it out? I took the stock price 98.36 times 1.0388. That's the historical move. And that's where I got the 102.14s. But I bought time. So if it doesn't quite reach there here in the next couple of weeks, it'll tend to gravitate back up. But 90% historical probability. You're not paying a lot of premium for that. Okay. The other was again, I'm always going to give an option of a vertical, a bull call spread. You know, bullish meaning the direction of the trade. I'm playing the call side. And that's just a real simple trade. I mean, I play with numbers, and I always like to get it cheap. And I generally like to do a $5 spread. So for this, from the 102, I had to go down to the 97. So here you would buy the 102s, 14s, hold the control key down, and then sell that. No, that did not work. My apologies. The exact opposite. Buy the 97.14s and sell. That's $2.17. Folks, that's not much difference than $1.99 buying the 102.14s. Difference is you're buying the 97.14s and you're selling those. Okay? Target price that I had as of yesterday was 102.88. As you see, the target has gone down a little bit to 102.17 because the stock pulled back 61 cents. Next trade. Actually, it's 448. I'm going to kind of cherry pick some of these trades. Okay, I'm flipping over a new leaf, and I'm jumping on the bandwagon to trade Facebook. Because the company is just making hand over fist and money. Again, historical, not great, only 2 years to base things on. But this is a momentum play. This stock is just doing really, really well. If you look at this 2-year growth, and by the way, most of the stocks, folks, that I'm going to talk about, especially when I show these 2-year charts with earnings, I have gone in and manually updated the earnings to reflect exact accurate earnings and exact date, because they're not always accurate with Best Choice, if anybody knows that. Okay? I mean, they're pulling the data. It's the data source that's not always accurate. It has nothing to do with the programming. It's just where they pull the source from. So I've gone in and manually looked on Thinkorswim and just manually put in the exact dates in this. So this chart you're looking at is extremely accurate. When you look at price consistency and earnings consistency, these numbers reflect extremely accurate growth and consistency on price and earnings. So this is a momentum play, strictly, even though seasonally it also has the opportunity to go up, but it's sitting way, way up here right now. You look at a 6-month chart, fairly high, 81.9% its extreme of price movement. But again, it's just momentum is going to drive this stock. There's another reason. I don't know if anybody follows mutual funds, but mutual fund managers have stunk this year. Most of the mutual funds' performance year to date has only returned about 2%. So they're in a pickle right now for between now and the end of the year to boost their performance and make themselves look good. So mutual funds are going to have to take a look at more high beta, high performance stocks like Facebook and buy into it to be able to create the growth. So from that perspective, as well as the just rampant move up on Facebook and the money that they're making, they're a very cash-rich company and low debt. This is the play that I'm making on this. So I was looking at the October '80s for $1.93. Now this has obviously gone up since when I looked at it, because it's gone up 63 cents. So there's a little bit more premium to be paying here. But, you know, great volume today, great open interest, 40 delta, only 3 theta, meaning you're netting 38 cents per dollar movement. The other option was I put the 75.80. I don't know if that still is a cost-effective one. Let's see, buy that, sell that. 260, that's at the limit of what I pay for an option or for a bull call spread. That's the limit that I'll pay. I won't pay any more than that. Not with this much time that I'm buying. Okay. All right, here's another fun one to look at that I found. What season is it, by the way? Fall, right now, from a sports perspective. Anybody know? Football season. So what do you think tends to go up? Beer, Anheuser-Busch. Got a 5-0 from September all the way into October with some pretty good point movement. Okay. So Bud is a play in my opinion, and I was looking at the October 115s for $1 by $1.15. You know, not a huge open interest, but I think it's a good play. Or you can look at December's, a bull call spread for December 110, 115s is what I put down. And there it is, 223, cheap, even though it went down $1.60, which is a good thing. It means you're buying it for less. Okay, seasonal trade due to football season is what I wrote down. All right. I'm just kind of cherry picking. You guys will have a lot more trades to look at. RRC, Range Resources. RRC. 90% probability, good point movement, good historical movement. Also, I was looking at it's been on a downturn here. But it's just been beat up. I also, when you get the Excel sheet, everybody, I have streamlined it. I got rid of the greater than or less than column because people were confused about it. It was simply and or. I used to have it in between here, in between strike and strategy, basically, on the Excel sheet, just to give you an alternative. In other words, you could do a directional call, or you could do I got rid of that whole column. But I added a column on the back of comments. And within that, any kind of articles that I feel are pertinent towards that particular trade, I created a hyperlink. So scroll to the right on the Excel sheet, because on this particular trade, there are 2 articles that I read of very positive news about the shale, I forgot what it's called, Marcellus Shale, that Range Resources has popped that's going to be extremely lucrative for them, and a whole bunch of fundamental stuff. So do click where it says click here in blue, read that, and that'll take you directly to the articles that I read. So I also looked, let's see, RRC, October 77.5 is what I looked at for 32. You see there's some big open interest that happened here. There's some big open interest in December. And as such, I looked at that 70. And I saw, wow, that's an anomaly. I wonder what the Januaries look like. And lo and behold, can you guys see that? The 70s, 2,465. And the January 70s at 5,200. So we could do a nice calendar on this, right? I'm going to buy that anchor out here in January and sell this one for 55 cents. Wow, that's because it went down 59. I put 60 cents on my comments. Plus, you've got what? Well, it was $5 of intrinsic value. Now it's $4.61. So take a look at that. Read the articles on RRC. I thought that was interesting. Oh, Under Armour is another play also. UA. That's a play. October 75s is what I looked at. $4.45 by $1.65, up 16 cents. Good open interest, delta of 38, which means a net of 35 cents. And it's got a historical good move, so that's a good trade. I think, I don't know if I talked about Visa last time, but Visa is also a good trade. 6 out of 6. Big move last year. Sitting kind of poised to pop up this year based on its average movement. Visa, I was looking at the October 220. Well, it's moved up $1.50. I was looking at October 220s. So it was a little bit less than that. But again, 250, 262, folks, based on a $215 stock, that's still very inexpensive, 1.2, 1.3%, and about a 31 net growth per dollar movement. And you're expecting a 6% move. Now you take 6% on 215. It's 227. So I fully expect it to go past the 220 mark. So that I looked at, and of course I did look at a bull call on it, 215, 220 for 232, which I like. That's underneath my 250. Means you have an opportunity on that to make 100% return on your money. Now that you hit confirm, I have an opportunity with 10 contracts wide to make 2680, and I spend 2320. So it's 100% return on my money. I like that. What other? Let's see. Okay, another one that I read, and again, this is some articles that I have included links on, is Men's Warehouse, which is the undisputed clothier now that they bought out Joseph A. Banks. There's been some things that have recently happened. This is not a seasonal trade, folks, at all. This is strictly a fundamental trade. And they have earnings coming out, I believe. If you go to MarketWatch calendar, type in the symbol, there it is. And that's, so this Wednesday after market, they're coming out. This is a trade that I put on. I will put on, if I like it, after the announcement. Because I don't know. The company may not do well because of all of its acquisitions and costs and expenditures it's taken in. But based on their consolidating these two mammoth billion-dollar companies, they are poised to grow $100 million after cutting out accounting, consolidating some headquarters and distribution and so forth. I mean, it's a great article, and it really makes a lot of sense. No, Greg, I sent out an email to everybody on Friday stating that the webinars are going to be at Monday at 4 p.m. I sent that out to everybody on Friday, so check your email. Perhaps you had missed it. And again, I'm going to take a poll at the end here if you guys want it later or 4 o'clock. It's when I used to do it, and it seemed to work well and for most people. And I've got to cater to the majority crowd. So anyways, this is a fundamental trade. I looked at the November 55s, again, buying time right here for 225 by 250, almost a 50 delta, 1534. And then what else I put? November 52.5 by 57.5, bull call. Yeah, there it is, 225. I like that. Let's see. Nike's coming out with earnings towards the end of the month, but what a trade, right? %90 probability. Nike's coming out on the 25th with their earnings. Aftermarket, it is unconfirmed, but that's where it's tentatively slated. And when you look at volume, a Nike, I was looking at October 85s, it was up 36 cents. So $1.17 by $1.22. Got a net delta of 31 cents and good open interest and good volume today. As well as you could do a bull call spread on the October 80-85s and pay $2.53. So again, a very similar in expenditure of cash, but a little less risk than going directionally on a bull call spread. All right, man. Okay, there's. I'm going to stop here. It's 5 o'clock, and open it up. No problem, Jay. I'll see you next time. Does anybody have any stocks they want me to look at? And I'll be glad to analyze them. Feel free to type it in. Okay, bank BA. Somebody wants me to look at BA. From a seasonal perspective, it's leaning towards a short. From a trend perspective, I see something very interesting. This, and again, I don't know if they offer weeklies or not on this. But I see something very interesting here. I see a breakout, and a breakout. This is a breakout trade today. These upward arrows, somebody's asking me. This is the David Elliott MOBO, where it's colored. And when price breaks outside, it's like a Bollinger Band, Greg. And when price breaks outside of it, it triggers an arrow. When price breaks either the upside or downside of the Bollinger Bands, it triggers an arrow. The little arrow is a John Person's pivot study. And you can get it right from Thinkorswim. If you go to studies and you scroll this bar all the way down to the P's, for persons, it's under PPS, Persons Pivot Study. Very good indicator. I use it on all my charts because it normally will be a precursor to the MOBO breaking out. I call this a MOBO breakout and a PPS breakout. Of course, this is just a two-line MACD. Okay. So interesting play. Somebody asked to look at a stock, but let me finish with this one real quick and see what kind of volume we're talking about here in Boeing. You know, it could be, I don't know if you guys do this or not, but you could trade a weekly on it. I would trade a weekly on it, folks, based on this right here. This is a momentum breakout trade. And you could probably make some quick cash by trading a weekly. You know, the 128.98. I may take a look at a chart that is a little bit tighter in time frame. You see 10-day hourly, boy, that thing's exploding. It kind of meandered, it took off, meandered sideways, but I still got a very strong DPO MOBO. And, you know, one of the things, 129, you know, what I like to do with something like this is a Fibonacci retracement, see where this thing is at right now. And it's, well, see, there's nothing stopping it from going back and retracing to the 129. It's busted the 61.8 today. It just blew right through the 38.50 and 61.8. So nothing's really stopping it. There's no resistance that would be running it all the way up to its last high. Now, this is obviously some good news. From 124 to 127, there's some kind of fundamental news that triggered this. So I'd probably look that up as well. Okay? Now, that's if you want a quick play, you could, you know, do at the money the 127s. What I would do on this is a bull call spread. And that's the only way I trade the weekly. $1.42. Now, that's taking it out. That's selling the 31s, 131s, and I probably wouldn't do that. So I'd have to go further in the money. Maybe the 125, 130s. Nah, see, that's starting to get too rich for my blood, 296. So I wouldn't do a $5 spread. I'd do less of a spread, meaning less profit. I would play with the numbers. I would do a minimum of a $3 spread, and I would not pay more than $1.25. And, you know, that way I could potentially double my money by the end of the week. That would be September. Either that. You got a lot of volume in here. See the 130s are only 50 by 53. I'd go one in to the 129s. I'd actually probably do the 128s to play it safe on the spot month expiration. So that's that. Somebody else asked to look at LinkedIn. Seasonal, we had a 4 out of 4, but it's already done its move for this year. Let's see. We probably have something a little bit longer. Running all the way to the 14th. Where is it at right now? Wow, look at that. Really nice momentum going on that thing. Where is it at in the course of a year? Okay, boy, that thing's just flying. But one concern I would have, Leon, on this is I have a MAC that's crossed, and I got a detrending MAC. So that's a little bit of a concern of mine. Not to say I haven't seen this happen, and then it just meanders up as the stock continues to go up. And I guess from a seasonal perspective, the other thing I would be looking at is this part here is a short. And again, this is so indicative of almost every trade I look at that's out there. Like all of these decision day stocks, it's another thing you can do, and it's part of Best Choice. If you're looking for trades, guys, I went through every single one of these stocks. That's how I found all the ones this week, as a matter of fact. I just looked at them from a seasonal perspective. So this would be a concern of mine, Leon, is that this stock is sitting way up here, and you can kind of look at the other years. You know, this patterns that it ran way up and then came down in 12, 13, ran way up, then came down, and it seems to be following that same pattern right now. There is no doubt this thing is way oversold at 92.2 extreme on Best Choices. So I'd be a little bit concerned from a bullish trade. Let's kind of see what the volume is on this thing on both sides of the fence. Well, the other thing I see about this is really a rich stock, Leon. This is a, you got to go pretty far out of the money to get your premium down to the, $4.30 would be a 2% premium, and really you're looking at what would that be? $4.60 plus another $2.30, so we're looking at $7.10 is 3%. So no, I guess that's not inexpensive from a premium ratio to stock price. It's expensive from a cash standpoint. That's all. That's October. What's happening for September? Looks like there's some short interest forming in the spot month. What are the weeklies showing? Weeklies are pretty evenly squared. Let's go out a bit in time. We have definitely bullish stuff out here in the money in November. And Jan, definitely more bullish than bearish. Here's a thought. As long as price stays above, I like the ADMA, we could stay in the trade. If it breaks below the 8 EMA, be careful. If it busts through the 20 SMA or 21 SMA, it doesn't matter, then it's time to get out. That's one way to trade this thing. But I would be cautious because this thing has had a nice run. Let me try this down low just to make sure I've got accurate information. It's had a good run already, So is it ready for its downturn? You know what I mean? Towards the end of the month. Somebody says it's their winner for the year. Well, yeah, man, if you chose this part right here, $63 move. Yeah, that's a heck of a trade, man. Heck of a trade. Thing has done nothing but go straight up. So it could be a momentum trade as well, Leon. It's just not a lot of history to look at to get anything, a pulse on it seasonally. Be concerned about the fact that it's really overbought. It looks like it's due for a pullback. This is typically a season in the second half of September where things start to pull back. We go back to, particular chart where the VIX is starting to pull up. You got a DPO way oversold, pulling back up. This thing is way overbought, pulling back down. So all of these things are indicative that we're getting time for the market to do a pullback, as well as some of the most of the stocks. Again, this is from a technical standpoint. Anything could happen. Any other stocks you want me to look at? Speak now or forever hold your peace. I've got to ask you guys a question. Is anybody on this webinar short the market? I'm not going to look for shorts, guys, because I don't ever hear about anybody shorting the market. Most everybody I talk to really only trades bullish. Which I know is really the majority of the market anyways. It's like 90% of the market. And the market historically goes up more than it goes down. Okay. Did you make any money on that, Bob? Somebody said they shorted a very fickle stock, in my opinion, and that's Sears. Oh, boy, look at Sears. It's supposed to go up this time of the year. Huh. Well, see. I would not trade that thing bullish right now. I don't know. They lost money on their earnings. They just seem to be trending down. When I like to do bullish trades, I like this all to point upwards, and it just happens to be the stock is oversold. Thoughts of the reduction easing? We'll see what happens. I think it's built into the market, Greg. The market has reacted very strongly to the negative side whenever the Fed said they're going to start pulling out. It does not like that. And let's face it, we all know that's what's propped up this market over the last 5.5 years. Even though I will make this statement, if you look at corporate earnings and their PEs, you look at the S&P 500 and the Dow as a whole, specifically the Dow, it is not overbought. It's sitting at about a 17.5 PE. Overbought is not until you get into 21, 22 on the Dow. So, anybody that's been on the bandwagon of the naysayers and the negative people over the last 2 years has lost money because it continues to rise. Now, could you say that's a direct reflection because of QE? Yeah, I think there's a lot to that. There's no doubt about it. It continues to prop things up. But companies as a whole, the big boys, are making money. Their earnings are reflecting it, and they continue to grow. So from that perspective, my humble opinion, it's a good thing they start pulling back. But let's see how the market reacts. I think it's built in because there's been so much talk about it, Greg. So I don't think it's going to react as bad as it did before and just start dumping. But it could be a catalyst because it is in the middle of the month, like Greg points out. That's at 9:15, September the 15th. So it is something to be very aware of, absolutely. Okay, it's 18 minutes after 5. I've gone for about an hour and 20 minutes. Any other questions or stocks you want me to look at? If not, I'll say adieu, as they say in French, or das vidanya, as they say in Russian, or do pobachenia, as they say in Ukrainian, or until next time, as they say on this webinar. All right, guys, good session. Any other thoughts or questions? All right, great. Listen, everybody have a good trading week, and we will talk to you guys next week. Good trading, everybody.